Greetings to all viewers. My name is Enjin Singh. I am the group leader for this assignment. My group members are Avikash, Payal, Shweta and Virginia. We are going to present our major group assignment. The topic that we have chosen is fair value accounting. Payal will be discussing on problem statement, research objectives, theoretical underpinning and how companies use fair value measurement in accounting. Shweta will be presenting on literature review and importance of fair value accounting to information quality on financial statements, while I'll be discussing on research methods. Avikash will discuss analysis and findings, figure 1, 2, 4, 8, 9, 10 and 11. And lastly, Virginia will be discussing limitation, recommendation and conclusion. The issue that we have identified is IFRS 13 fair value measurement, which explains how to measure fair value by providing clear definitions and introducing a single set of requirements for almost all fair value measurements. A unified IFRS framework for determining fair value is established by IFRS 13, which also requires disclosures about fair value measurement. According to the concept of an exit price, the fair value definition in the standard uses a fair value hierarchy to arrive at a market-based measurement rather than an entity-specific measurement. IFRS 13 was first released in May 2011.
According to debates going on for several years whether fair value accounting is beneficial for preparers and users of financial report or has more limitations, the problem statement is to discuss the importance and challenges of fair value accounting in Fiji. The research objectives include firstly, to provide overview of auditors' evaluation when applying fair value measurement, secondly, to identify effects of fair value measurement on preparers of financial report, thirdly, to explain fair value measurement and its contribution in financial information quality, and lastly, to provide examination of fair value measurement in association with IASB and FASB.
Literature review. The historical cost technique has been widely used by businesses over time to value its financial instruments, whereas the fair value technique was created as a result of prior cost estimates' failure to take market conditions into account. Fair value hierarchy. Fair value hierarchy is a framework for measuring and managing risks. There are three levels of fair value hierarchy. Level 1, unadjusted quoted prices in active markets for identical assets or liability. This is the most liquid market, and the prices investors pay and receive are based on current expectations of future cash flow and price changes. Level 2, inputs are quoted prices that are either available or can be reasonably obtained, such as contract terms, estimated future cash flows, and other available information. Level 3. Significant inputs are unobservable and unquantifiable. These inputs could be things like brand value or customer loyalty. Benefits and challenges. Adoption of fair value measurement includes both benefits and challenges. The main benefit were that it improved the comparability of fair values across firms' liabilities and assets, as well as it improved more relevant data to users of financial statements. And the main challenge was that many preparers had to make significant changes to their valuation processes and controls. Issues faced by auditors. Volatility of stock market and capital is the biggest challenge of calculating fair value. Due to this instability, evaluation issues develop since auditors must take into consideration of future conditions, transactions, and events whose effects are unpredictable, thus creating subjectivity. Stock market and capital instability causes an increase in audit flows, thereby compromising the accounting of accounting estimations. As such, uncertainty increases and encourages the likelihood of important accounting assumptions being misstated. Fair value accounting in Fiji. Majority of enterprises in Fiji are privately held or family owned. Therefore, it might be impractical and expensive for them to comply with fair value accounting. Fiji has a hybrid reporting approach that incorporates both historical cost and fair value accounting. The hybrid system contains different literations for each entity. As a result, they account for assets and obligations in various ways.
Practical underpinnings. Corporates get assurance from third parties that their fair value measurement is reliable. Those information related to fair value measurements varies due to many market disciplines and complex situations. Obtaining reliable assurance gets tough at times. This reliability verification is generally provided by independent third-party external auditors hired by organizations. Under certain situations, organizations select accounting methods and rules in order to report its performance. As such, principals appoint agents to manage resources and make decisions on their behalf. This is regarded as agency theory. So agency theory can be viewed a paradigm used to interact with business owners and their agents. This scenario mainly connects with managers as agents and shareholders as principal or managers and debt holders. Agency theory describes the relationship between two parties whereby the agent represents the principal for daily operations. There is a chaotic time in agency theory where their tendency of misbehavior as interests of managers and owners differ. As managers are regarded more superior over the investor and due to time constraints, the financial statistic is incorporated. Agency theory is coordinated with earnings management and looks into conflicts of interest between principal and agents. These practices have led to long-term development of organization and helped in boosting short-term earnings. Agency theory's logical and rational characteristic is considered a relevant instrument for making decisions in complicated situations. Management are gratified to implement greater caution in responding to uncertain situations under agency theory, which is directly applied to fair value practices of an organization.
Moving on to research methods, the following primary research were used. Questionnaire. A set of 20 questionnaires were designed and distributed to both the preparers and users of financial statement, which included 10 preparers and 10 users. The questionnaires were distributed to gather information relating to fair value accounting. Later, questionnaires were collected and information was used in analysis and findings to compile this assignment. 60% of the information obtained from the questionnaire was relevant to the topic. Interview. 10 set of interview questions were prepared to obtain information on people's perception towards use of IFRS 13 in PG. An interview was carried out on 19th October 2022 in different areas of PG. 10 individuals of different occupation and ages, falling between 20 to 60 years, were interviewed and relevant data was collected, which was used to complete this research paper. Lastly, archival research was used. Annual reports of Vision Investment Limited and BSP for the year 2021 was extracted to see whether the company is using fair value accounting. Annual reports of BSP for the year 2020 was also extracted to see the application of fair value hierarchy. Annual reports of Fiji Care Insurance, Fijian Holdings, Fiji Television, Sun Insurance and Kontiki Finance Limited for year 2021 was extracted to see which approach the company used, that is, market, income or cost approach.
Hello everyone, today I'm going to discuss on our analysis and findings. Our first subtopic comes to auditor's evaluation while applying fair value accounting. As you can see, our first bar graph shows for PR 1.1 showing issues faced by auditors while using fair value accounting. There were three issues which our auditors were facing. Firstly, use of estimates determined by preparers, lower reliability and lack of comparability. According to our distributed questionnaires, it was came to know that 5 auditors said that use of estimates determined by preparers is one of the bigger issue that they are facing in applying for fair value accounting. And Two of the auditors said that lower reliability is the another challenge which they are currently facing on measuring fair value. However, the auditors said that lack of comparability among the financial reports for the different organizations were the major issue which they were facing. So there we can see there are differences among the views of the auditors to measure fair value accounting. Moving on to effects of fair value measurement on preparers of financial report. Figure 2.0 is where a pie chart shows reviews of auditors and accountants to fair value accounting versus traditional approach. It came to know through our distributed question is that two of the auditors said that traditional approach was well used when it comes to measuring financial reports or to the users of the financial report. However, the auditors claim that use of fair value accounting has provided much more fair value for money and for the assets and liabilities of a company.
Effects of fair value measurement on users of financial report. The below bar graph shows the type of method preferred by users of financial report in Fiji. It states that in between age 20 to 30, there are 3 users of fair value accounting. Secondly, 3 users aged between 30 to 40, they have chosen fair value accounting, whereas 1 has chosen historical cost method. Looking at age between 41 to 55, 3 users have chosen fair value accounting and 3 have used historical costing method. Looking at the age of between 50 to 65, users have opted for historical cost method as more suitable. So overall, when we look at the graph, it states that the older generation are more used to traditional method and are comfortable using it, whereas the younger generation are more adaptable to change and they embrace the new method, that's fair value measurements and the benefits that it offers.
Moving on to figure 4.0, where the list of companies who use fair value accounting. These are the companies which was looked by our group who are using fair value accounting. Firstly, Vision Investment Limited, and secondly, Bank of South Pacific. These two companies are listed in the South Pacific Stock Exchange. As going through their financial report, you will be able to know that they are more into use of fair value accounting if compared with other organizations.
How companies use fair value measurement in accounting. To determine the fair value, organizations look at actual market transaction for assets and estimate the earnings of that asset. There are many companies in Fiji that uses fair value measurement, and they include Fijian Holdings, Fiji Televisions Limited, Fiji Care Insurance, Sun Insurance, and Kontiki Finance Limited. Firstly, Fijian Holdings and Kontiki Finance Limited uses fair value measurement in order to calculate their return on investment. The asset for Fijian Holdings include product, stock, and security, which is recorded at their fair value and to some extent agreed between both buyer and seller. Secondly, Fiji Televisions Limited uses fair value in assets and liabilities where cost is allocated to individual programs in a package as stated in the contract. Moreover, Fiji Care Insurance and Sun Insurance have assets like bonds, stocks, and accounts receivable, which is recorded under fair value measurement, unlike those assets that liquidate over time like furniture, fixtures, and equipment. Moreover, there are 3 approaches to fair value measurement that above listed companies use, and these are income, cost, and market approach. The below pie chart shows the usage of fair value measurement in Fiji companies where cost approach is at 20%, income approach is 32%, and market approach is 48%. So that means that the Fiji companies, they prefer using market approach.
The importance of fair value accounting to information quality on financial statements. When assessing assets and liabilities to create financial statements for banks, managers play a crucial part in the accounting measuring process, as the banks will manage and oversee these financial accounts in accordance with the public interests and the economic aims and goals of the state. As stated by Kasser and Denown 2016, interest in the assets and liabilities measured at the fair value is to give a lot of relevant investors information, which helps in making appropriate investment decisions. As a result, the process of creating the four financial statements clearly reflect the choice of accounting measurement method. Figure 6 bar graph shows the fair value accounting's importance to information quality for managers. These views of managers are from the respective companies, that is Bank of South Pacific, Fiji Care Insurance Limited, and Fijian Holdings Limited. As you can see in the graph, 14% of BSP managers are able to create cash flow using the quality information. 5% are able to explain how to use funds. 11% says that it helps them with enterprises' periodic measurement of income, and 10% says that it helps them in making appropriate investment decisions. And for Fiji Care Insurance Limited, 7% says that it gives them the ability to create cash flows. 10% says that it explains how to use funds, while 6% says that it helps them with enterprises' periodic measurement of income, while 12% says that it helps them in making appropriate investment decisions. And for Fijian Holdings Limited, 4% said that it gives them the ability to create cash flows, while 15% said it helps to explain how to use funds, whereas 2% said that it helps with enterprises' periodic measurement of income, and the rest 4% said it helps them in making appropriate investment decisions. This bar graph is showing the importance of fair value accounting to information quality for investors. The investors interviewed for this are from the respective companies: Bank of South Pacific, Fiji Care Insurance Limited, and Fijian Holdings Limited. As you can see in the graph, 16% of BSP investors said that the quality information helps them to evaluate their investments. 10% said that it helps them with the evaluation of their expectations for the future. And 8% said that it helps them to make best possible economic decisions. For Fiji Care Insurance Limited, 9% of their investors said that it helps them to evaluate their investments. 14% said that it helps them with the evaluation of their expectations for the future, and 10% said that it helps them to make best possible economic decisions. And for Fijian Holdings Limited, 7% of their investors said that it helps them to evaluate their investments. 12% said that it helps them with the evaluations of their expectations for the future, and 14% said that it helps them to make best possible economic decisions out of it.
Moving on to the application of fair value hierarchy. Fair value hierarchy consists of 3 different levels. I'm going to discuss on fair value hierarchy for Bank of the South Pacific. The 3 different levels include quoted price, which is level 1. The second level is observable input, which is level 2. And the third level is unobservable input. As you can see in figure 9.0, the illustration of how in each level the financial assets and non-financial assets and financial liabilities and non-financial liabilities are listed. As we can see, firstly, quoted price, which is level 1. No valuation has been listed under level 1. However, we can see if we look at the financial assets, equity, treasury bills, and government and inscribed stock is listed under level 2. If we compare that with level 3, only equity security is listed under level 3, which is unobservable input. However, treasury bills and government inscribed stocks are not valid there. So we can see difference among each level of inputs under measuring fair value accounting. Moving on to fair value measurement relating to IASB and FASB. The table below shows methods IASB and FASB used to report fair value accounting. IASB is the amount for which a liability can be paid off or an asset is exchanged. It also shows four-level measurement hierarchy in establishing fair value. These four levels of measurement hierarchy is normally used by developed nations such as Australia and New Zealand. However, FASB is more focused on investors and has come up with external guidance to protect the investors. Investors is the main priority for FASB since they are the people who invest in a business so that money circulation and growth is sorry, so that money and growth is experienced, or we can say fair value accounting in Fiji. The table below shows the benefits and challenges of using fair value accounting in Fiji. Benefits includes accurate valuation, true income, adaptable to different types of assets, and helps in business to survive. However, challenges are the costs and the practical difficulties and difficulty to understand and reliability of information.
Limitations. The challenges encountered when compiling the report were the distance. Members are in different locations that's difficult to meet and discuss. The other one is the time. We're working students. Therefore, finding time to do studies can be a challenge at times. And then we have the feedback from questionnaires. People do not answer the questions as we expected. Setting up interviews is another. People keep postponing the time for interviews because they have other commitments. And the other is if we are to do a thorough research of the whole economy, it would be time consuming and expensive. We have identified areas for further studies. And they are, if we are to do further studies on the FVA measurement, we should include other countries in the region to identify the benefits and challenges for fair value measurement. Increase the scope of research to include other regionally listed companies, such as the PNG Stock Exchange, because the current paper only focuses on the listed companies in Fiji. Further studies on benefits and challenges of FVA under other accounting standards, such as IFRS for SMEs in the Pacific. For recommendation and conclusion, based on the findings and analysis, fair value accounting method is preferred over the historical cost method. It is recommended that accounting organizations such as Fiji Institute of Accounting should educate the public on the benefits and challenges of the fair value accounting method.
That's the end for our presentation. Thank you for watching.